Hello there, this is the Bookkeeping Master on YouTube. Welcome to this brand new series, Learn How to Reconcile Accounts. That includes how to reconcile a bank account. I am the Bookkeeping Master. Let's jump right in. This is a 3-part series, and this is part 1. It's all for free. It's all on YouTube. However, you may find it more beneficial to watch this series on my website, which is also for free, because there's a lot more material on the website. There's text, there's downloadable illustrations and things like that. So feel free to head over to the website and watch this series. In part 1, which is this video, I will cover the basics of reconciliations, such as what is a reconciliation and why reconciliations are needed. Part 2, which will be the next video, I will give a reconciliation example. I will do a reconciliation with you. There will be some documents on the screen and we'll go through the process of doing a reconciliation. Part 3, which will be the final video in this series, I will teach you how to do a bank reconciliation. Now, most people watching this series are interested in part 3, but don't just jump to part 3 to learn how to do a bank reconciliation, because these videos are built in order for a purpose. It's building blocks. We will build a foundation and build on that. You will understand bank reconciliations so much better if you watch all 3 videos rather than just jumping to the end. So let's get started. What is a reconciliation? What do you think a reconciliation is? When we think of the word reconciliation or reconcile, it's bringing 2 things together. So if people reconcile, they come together, they come to some sort of agreement. In accounting, when we reconcile, we are bringing the accounting records in agreement with some sort of financial document. And this first sentence at the top here, the paragraph says, reconciliation compares an entity's accounting records against a financial document. So it could be, as an example, that in the accounting records, there is a bank account or a loan account. And we can compare the transactions in that bank account, in that loan account, against an official document, which is usually a statement, like a bank statement or a loan statement. So we're checking that the accounting records match an official statement. The balances are the same, all the transactions are the same. A reconciliation includes reviewing transactions, adding missing transactions, and removing accounting errors, such as duplicate entries. And this is generally what happens when we reconcile an account or reconcile the accounts, is from the financial document, which is usually a statement, we can see that the accounting records have errors. There's something wrong. There's duplicate entries. There's entries that should be there that aren't. So the transactions that are missing. And that's the whole point of the reconciliation, is to match the accounting records against an official document. Any questions? Let me know below. There's a comment section below. Just ask your questions. If you're finding this helpful, please like, please subscribe for more videos. So why do we need to do reconciliations? Well, as mentioned, when a reconciliation is done, we have the opportunity to review transactions, add missing transactions, and remove errors. Those things are very important, aren't they? So why does a reconciliation need to be done? Accounting reconciliations help the financial accounts to be reliable and accurate. Without reconciliations, financial accounts or accounting records are more vulnerable to errors. Reconciliations must be done to produce accurate financial statements. So it's all about having accurate, reliable, trustworthy accounts. Reconciliations make that possible. So which accounts can be reconciled? Any account where there's an equivalent financial document, which is usually a statement, can be reconciled. So bank accounts, you receive bank statements. You can download them online, sometimes you receive them in the post. That's statements for current and checking accounts, savings accounts. Those can be reconciled. You can compare the accounting records, the bank account within the accounting records against the bank statement. You can reconcile. You can compare the two. You can review the transactions and try and get them to match. Credit and charge card accounts. Once again, you receive credit card statements. Usually once a month you can download them or receive them in the post. Reconciling credit card and charge card accounts within the accounting records, the financial accounts. Loan and mortgage accounts. Once again, there are statements available for loan and mortgages that are in the business's name. The financial accounts should contain nominal accounts, asset loan accounts for these things, and they can all be reconciled against the statements. Tax accounts, corporation tax, sales tax, the governing tax body here in the UK, that's HMRC. In the US, that's the IRS. They can usually provide statements showing balances on your tax accounts, payments you've made, charges that have been incurred. So statements are available and you can reconcile against those statements. Supplier accounts. So suppliers usually send statements that show, once again, the balance on the account, invoices, credit notes, payments made on the account. Those things are detailed on a statement. You can then reconcile the supplier accounts on your accounting records in your financial accounts against those statements. So these are the accounts that are usually reconciled, the most common being the bank account. And most bookkeepers will be required to reconcile at least the bank account. I hope this has been helpful. If it has, please like and watch the next video. If you do want to watch this on my website, then all you need to do is go to freebookkeepingaccounting.com, click on free stuff. I have all these free courses: bookkeeping, payroll, credit control, business planning, management accounts. It goes on and on. So many free courses, all for free. Click on reconciliations, and this is the course that you're doing. So you can read along as well as watch the videos. I'll speak to you in part 2.